I think I'm double mic, so I'm going to stand a little bit away over here. My name is Rick Parker. I'm a managing director at Accenture. I lead our security strategy and risk management practice in North America. And I was invited today to moderate a panel on security, risk, and fraud in financial services and payments. Pretty exciting for me, since that's where I live. I don't want to spend too much time about myself because it's really about these four esteemed panelists today. So I'm going to actually let each of these guys spend about 30 seconds on each other talking about the show. I think we'll start, Chris, if you could go ahead and tell everybody a little about where you come from and what you do.
Sure. Good afternoon, and thank you again for the opportunity to be here today. I'm responsible for market strategy and strategic partnerships at ControlScan. We're up the road here in Alpharetta, and we do compliance, credit card compliance, HIPAA compliance, and also data security in general. I spent a couple hundred years in the payments and electronic banking industry, and then about 10 years ago, I discovered PCI compliance, payment card industry compliance, and data security. And for some reason, I just absolutely started loving that. Had my own ISO, independent sales organization at one point, and started getting involved in PCI. So I love working with the SMB market, where there's a dearth of knowledge, IT knowledge, and because I don't have a traditional IT background, it's a little easier for me to go in and help simplify things, and then what we try to do is be a single source. So when we've identified issues and gaps, we also have solutions for those that are meant mostly for the SMB world.
Awesome. Gus?
Thanks, Rick, and thanks for not telling this Atlanta crowd what northeastern city I flew in from this morning. My name is Gus Coldebella, and I'm a partner at the law firm of Fish & Richardson. Prior to that, I was the general counsel of the Department of Homeland Security in Washington, D.C. And while I was there, we spent a whole heck of a lot of time thinking about cybersecurity issues and information sharing between the public sector and the private sector, trying to shore up the government's own cyber defenses. And I think one of the things we're going to talk about today is how this new administration might put that into high gear. Right now at Fish & Richardson, I'm the leader of the cybersecurity practice. And what we tend to do is help companies prepare for, respond to, and recover from the inevitable attacks that will happen. And that includes everything from talking to boards of directors about corporate governance, their fiduciary duties, how to handle this as an enterprise risk management issue, thinking about it not as a server room issue, but a boardroom issue, dealing with regulators, including for public companies, the Securities and Exchange Commission, which is making a big splash in the regulation of cybersecurity, as well as the Federal Trade Commission, and essentially quarterbacking the cyber attack when it happens, because usually it's the first time it's happened to a company, but we've been through it a heck of a lot. So looking forward to the discussion.
Thank you. Ken?
Thanks, Rick. Ken Allen. So I recently joined Equifax. I actually have been in the fintech space before it was called fintech. In a lot of those roles and functions really was as the merchant of record or the financial institution of record, and as a vendor of record. And so I've lived and breathed a lot of different ways that fraud has manifested across payments along with accounts. Have seen a lot of things that just scare me at night. My daughters feel it every night when I go in and say, don't look at a website that does this. And they're like, just leave me alone. I want to do my thing. So definitely look forward to interest on some of the discussion here today and helping to further some of the understanding of how things are evolving.
Excellent. And Tracy?
Sure. Tracy Metzger. You guys hear me okay? Tracy Metzger from Vesta Corporation. I'm the Chief Operating Officer with basically responsibility over our operations, service delivery, technology, and product. 25 years or so in the payments industry. I thought I was the oldest person in the payments industry, but Chris, you look fantastic for being 100 years into this.
Thank you.
So I've been with companies like Concord EFS, which is part of First Data today, North American Bank Card, and a few other companies. I'm very excited to be here today. Looking forward to the discussion. And
Thank you. Well, thanks everyone for coming out, and thank you all for braving the weather if you came from the Northeast today. I think we'll start this off. I want to come back to you, Gus. You touched on this. There's been a pretty brisk pace, I'll say, in the opening days of the new administration. Just last week, our new leader decided to change course on a potential cybersecurity executive order. And while we can't really foresee where that's going to go, and maybe you have some insights there, what do you see as the changes that may impact maybe regulatory or otherwise critical infrastructure that might maybe hit the financial services industry coming out of this new administration?
I think the last 6 months have been very interesting for those of us in the cybersecurity industry and really for everyone, because the campaign and the election itself shone a really bright light on cybersecurity issues, including the potential downside of spear phishing attacks with the DNC and the fact that nation states are also very, very interested in breaching not only other countries' networks, but companies' and entities' networks. So about the executive order. So the really short backstory is that the Trump administration's first cybersecurity executive order was sort of floated to the press early last week or the week before, and the president had scheduled an event to sign it and then didn't. After a meeting with his advisors, we think, though we don't know, that it's going to maintain the same form, and the form is really important. The substance of it is really important. I think it's a very strong statement, both to have an executive order on cybersecurity come out so early in an administration. It signals to the country and the world that this is an important issue for the new administration. And from a substantive point of view, it's a good, strong draft. So what's it do that's the same, and what's it do that's different? What it does that sort of carries through from the Bush administration, the Obama administration, is it gives a good, strong look at federal agencies' risks and capabilities and vulnerabilities. And it's put a really tight timeline on the agencies to think about those things, 60 days. But that's mostly on the government side. Right. I think the really important tone shift or advancement here that concerns everyone in this room is Section 8 of the new order, which gets the administration to think about private sector incentives. That is, how is the government not going to regulate what cybersecurity looks like, which, by the way, would be a disaster, but instead, how is the federal government going to create a space to encourage companies to up their cybersecurity game and encourage them to adopt new, effective technologies? There's a saying in the government, personnel is policy, and you've heard some of the names that are thinking about cybersecurity. General Kelly is the new Secretary of Homeland Security. Rudy Giuliani is doing this from the outside. But a name that you might not have heard of is a guy named Tom Bossert, who I served with in the government. He was the Assistant Homeland Security Advisor to President Bush, and now he's the Homeland Security Advisor to President Trump. And I see his fingerprints all over this. Tom believes, as I do, that we do have to let the genius of the private sector help us in cybersecurity by encouraging those sorts of developments from the private sector rather than sort of drilling down a command and control style regulatory scheme. So what do we think is going to happen? Yeah. I think we're going to see a lot of ideas kicked around about liability protection. We're going to see companies that adopt technologies that are certified as effective by the government receiving some level of liability protection in case they fall victim to an attack. I also think that this administration realizes that when it's country versus company, that is nation state trying to get a company's information, company's probably going to lose at some point. And we might see a liability protection scheme for those types of attacks so long as the company is hewing to a well-known framework such as the NIST cybersecurity framework. The organization of the government is super important here as well. I think What they're trying to do is encourage information sharing between you guys who see all of the activity on the networks and the government that can do something about it. So there may actually be a push to having the government be more involved in network defense of companies that we consider to be critical infrastructure, including those in the financial service industry.
Yeah, I mean, Chris and Tracy, looking from a payments company perspective, and then also Ken, I mean, from the consumer trust perspective, I mean, we've seen the transition to EMV in America, and I think one of the biggest misconceptions we have is really that EMV equals payment security. But on the back of this question, like, how do we see the current activities in the government translating to movement for the payment industry and also protecting the consumer trust?
Want to grab that or go for it? Sure. So I keep getting mic'd down. So for me, I guess when the government gets involved in the payments industry, it's probably never a good thing for us. But I see the government right now as very reactive to cybersecurity issues more than being proactive to it. I mean, when you talk about security is something that you like to keep quiet. And when you start talking about challenges or issues in any area, whether it's in the payments area or just election, voter fraud and things like that, the more emphasis that we put on these certain things, the more it's going to attract hackers. So for me, it occurs to me that silence is the best policy when it comes to thwarting fraud. And I think that we spend too much time talking about where the holes are, and that's just going to continue to give opportunities for the hackers and the bad actors out there to go out there and find more holes. So I think that the more that the government focuses on addressing the issues instead of talking about the issues and making them more visible, I think the better we're going to be.
And then just to follow up on that, I mean, we have the government on the one side and the media on the other. And I think we all know, especially if you're in a security industry now, the media has paid more attention to us in the past several years than they ever have, right? Is anytime there's a breach, whether it's Target or a payments institution, this actually makes the evening news in a way that it never has before. And I think one of the big things was we pushed out a chip and pin to the end base for a lot of industry reasons. But from a consumer perspective, when we're looking at things that are expanding, things like card not present fraud and the skimming, whether it's at the pump, which is something we see on the news all the time, or otherwise, how do we start to message out to the industry, to the consumer base, that the industry actually has their interests at heart?
That's a tough one because it's a very fragmented market in the U.S. still for payments, as you know. When you look at the EMV world, we were a late starter into it, but we've made a lot of progress. However, the misnomer is that chip card enablement will suddenly solve all the security problems, which it doesn't. So if a business is using chip-enabled and they're using like a point-to-point encryption solution, something like that, that's going to create a lot more security. We're starting to see some traction with those things, but it does have a ways to go. And I think we're going to see, we have also seen that, yes, there's an increase in skimming. That tends to be in certain areas like metro areas, and one of the parts affecting that is automated fuel dispensers are not required to be chip-enabled until 2020 because of the cost. And we see very creative fraud at ATMs. If you want to see the evolution of something that happened fast, fraud at ATMs with skimmers and now shimmers, where they can read the information between the chip and the reader by putting a shim in there. They can't replicate a counterfeit card, but they can create a card that is mag stripe red. So the answer is, when we get pervasive chip and pin across the country, we will see that a lot of that kind of fraud will go down. But we'll see a corresponding increase we're already seeing in card not present.
And then
e-commerce.
For the consumer end, where they may not be as understanding of the technology enablement that comes into the market, how as organizations, payment processors, how are you working with your consumers, meaning the enterprises that you're either processing payments for or providing security for the payments that are processed? How can there be an education to the market that the media could eventually pick up on and translate to the users that say, there's this basket of fraud. We're all getting, my card gets hit many times a year as a security executive. That's just one of the perks of my role. It just says on LinkedIn, hi, you're a security executive, come hack me, which is great because then we hire them, it's fine. But on the other side of that, there's the general public, right, that looks at it. And we were reading a study just yesterday as I was trying to prepare for this, that in Europe, when a company is a target of fraud and has to disclose, that as high as 90% of their consumers would switch a bank or switch their merchant of record just based on that. In the U.S., it's around 69%. And how do we start to transition and make them understand that this is a moving target in the theater of war, so to speak, and that other than the bank's going to give you the money back, that there is safety in electronic payments?
I think there's a couple of different ways that it's already started. Mm-hmm. I don't know that the average consumer understands it fully, right, which is part of the problem. I believe making it simple with technology, so a lot of self-service. Mm-hmm. I have different banks that when there's a suspicious transaction, is this you, right? Yeah. So if you get those messages, you interact that way, great. My parents, no, not as great, right? So call in on the number on the back of the card, and some of the messaging actually is becoming, hey, we want to make sure that you're taken care of. So, regulations at this point in time are on behalf of the consumer. They're beneficial to the consumer, but I think it's a mix of technology and really the good old customer service that really just speaks to it, right? We can publicize it, but not everybody sees everything. So I think sometimes it's just living through it and adopting, because you're seeing and hearing more and more about it happening all the time, right? I know my card's been compromised multiple times, but when your account at a bank gets compromised, it's a little bit more significant. Whoa, wait a minute, what happens to my mortgage payment, my bill payment? So it becomes more intense, depending on fraud is, let's not kid ourselves, fraud is an enterprise. It's organized and it's global and it's not going away. So EMV will help parts of it. Card not present or customer not present, as wallets become more of a commonplace, is tougher to manage again. So it's a blend of technology and really the hand-holding that is really just going to take a little bit of experience, and then word of mouth spreads like wildfire when you have a really good experience in one way or another.
I think you touched on something really interesting there, and that's the generational divide there, right? There's people that are still here that remember when credit cards were first becoming a thing, and now we have the millennial generation where things like Venmo and other instant payment and peer-to-peer payment exists. How do we look as a card security providers to be able to keep the trust with the millennial generation that might be early adopters for things like Venmo, but at the same time that can create a barrier to entry for the market if they don't provide the security in the new forms of payment?
I think with the explosion of payment applications for tablets, for mobile devices of any kind, as a security person, I feel like it's gotten out ahead of some of the security aspects that need to catch up. At the same time, the demographics are fascinating. A lot of times the younger buyer, they're more worried about friction in the transaction than they are about pure security. They'll take security if it's along with a transaction that doesn't take 10 times as long. So they're okay if you're using an online e-commerce or mobile e-commerce process through one of the card brands that does an extra check, or biometrics. They're fine with that, as long as it doesn't make the transaction too inefficient.
That's an excellent piece for both of you. And actually, from the Equifax perspective, I'm always very interested in, and I think that's our next topic, is looking at managing that trust on the end when these things are breached. But how do you manage, as the technology is just moving so fast that Moore's Law is obsolete, friction and seamlessness with the newest technologies and maintaining security?
Yeah, I think the way the space has evolved, right? This is stepping back before it was called fintech again. As the merchant of record back in the day, I didn't share any data. I didn't collaborate with a lot of my peers in the industry. It was, look, I put things together, I learned, I evolved, and then I tweaked and kept on going. That's my claim of my gray hair. That's what caused all this stuff. But I believe collaboration has actually changed, especially in the last 5 years. Technology has enabled it to be done a little bit more, but I think you've seen strategic collaboration between firms, organizations across FIs to vendors to merchants that are sharing a bit more data not for sharing data, but for building intelligence. And I think that's where the game of data is turning into analytics, which is turning into intelligence. And that intelligence is, at times, friction when it's necessary, but it's actually becoming more and more frictionless. That you don't realize it's happening, which doesn't invade on privacy as much if you have permissible purpose, but it really is becoming more of that collaboration within learnings across the industry, within, let's say, verticals of an industry, and even specifically within a client. A lot of organizations still don't connect the dots on a consumer experience across all their lines of business. And that's improving, but the collaboration between companies like up here, I think starts to really change the game, and that's happening behind the scenes more than I think most consumers realize. And it's really powerful to help us all improve, yet stay competitive on the whole mix.
And going back to that piece of the executive order, do you feel that self-policing and collaboration within, say, governmental organizations, the industry, the credit bureaus, to create some sort of standard that can also be rolling to keep up with the technology changes, would be a better way to manage this than to go to a regulatory or legislative route or something like a new PCI that would maintain that? Like, how do you think that collaboration would help?
Towards,
Go for it.
well, again, I want to just kind of play off of your collaboration. I think collaboration's king right now. I think the formation and the continuation of the Merchant Risk Council is great. I mean, there's things like the Merchant Payments Roundtable. That is great. You get immediate feedback on situations that are going on. I think that's how we're going to continue to thwart fraud in this industry. And I mean, every day, at Vesta, where we're at, we work with a lot of online prepaid cellular transactions, which are really prone to fraud. And we're always, seeing different patterns of attack. And we're always collaborating with other players in the industry to try to find if they've seen something or how they've approached attacking that fraud. I think that the more that we continue to collaborate, the more that we're going to win. And right now, the numbers, unfortunately, there's some of the stats are out right now. I mean, fraud is on the rise, right? I think it was 5% of all consumers in the United States experienced some degree of card fraud in 2016. But the good side of that is the actual amount of fraud is starting to sink down. And so things are working. And, we just have to continue to collaborate and find ways to quicker approach and thwart that fraud. And I think that collaboration platform is going to be the way it's going to continue to get better.
I think the answer to your question is definitively yes. It is better for the industry to come up with its own standards and norms and information sharing pathways than it is to wait for the government to come and save us, because if we're going to be waiting a long time if we think the government is going to save us in this area. Industry itself has made incredible strides in information sharing even before the CISA legislation was passed at the end of 2015. Geographically based information sharing groups, industry sector information sharing groups have really moved the needle in the ability of companies, infrastructure owners, and everyone else to get a handle on what threats are out there. And I think that has materially changed the security landscape for all of us. And then, so what's the next step? I think the next step is, we have to provide, the government has to provide incentives for doing the right thing. The NIST cybersecurity framework, which was issued under the last administration's executive order on cybersecurity, another great leap forward. I think it's an important thing, one of the very few really great things that the government has done in cybersecurity, but it's completely voluntary. And if you're the general counsel of a company and you're being asked to, for example, share information with the government, but you're not guaranteed that the information you share isn't going to be used by your regulators to come back and regulate you, then the general counsel is going to say, I'm risk averse, I don't want to do that. So I think the next stage of this is removing the disincentives to sharing across industry and with the government, and then creating incentives for companies to hew to whatever standard the industry itself, with the help of maybe NIST, comes up with.
And I mean, NIST as a consulting organization, it becomes a framework for us to leverage, right? The old versions of NIST and the new version, and leveraging PCI and others, it does help us from a corporate perspective, and then the audit houses will come and audit to that and issue, this company is here, and this data center, and this system meets that requirement. Unfortunately, I think when the market sees this level of certification, they believe that means that the risk has been remediated and that breaches go away. And that's a challenge for us. For us, the average CISO that's a new CISO may not understand that just implementing a framework doesn't make you okay. There's millions of dollars you're now going to spend to go remediate your technologies. And I think a lot of organizations in this room have probably experienced different remediation activities, whether it was platforms that we've changed into the cloud and moved payments and transformation. And I think it just opens us up to a wider barrier of risk that obviously creates a good bit of business for me, and I'm happy about that. But there is the other aspect of us. Nobody wants to see a new SOX, right? Nobody wants to see the burden go back on the companies. And I think it puts the burden on the organizations to innovate and to come back. But with that innovation comes back to the information sharing, removing disincentivization. And then that comes back to where the question was before, is how does the credit bureau, who becomes an aggregator of information, right, who is in a great position to take information from the tech companies, from the financial services organizations, but provides that as a consumer base of knowledge, how do you then work with a governmental organization to remove the disincentive that says our information isn't always going to be accurate, but we strive to meet that? If you give us better information and more access to information, we can improve quality of data, and then the consumers are confident in what we have. I mean, where does that go for the credit organizations?
Yeah, it's tough, right? At the end of the day, this isn't a flip of the switch or a change of an administration. It's a change in thinking. It's a change in how you approach problems. I generalize it this way. A lot of the problems that were solved the last 10 to 15 years were maybe 1 to 2 that you solved, whether it's opening an account, whether it's verifying income, whether it is going down the path of any of the financial service type institutions or products that you can get, or just buying something as a guest on a merchant website, right? They're very different and it's complex. But I think I'm going to go back to the technology and actually the framework component of government. I believe regulation to help allow more, giving a little guidance to say, hey, we're not saying a technology, but we're saying the approach with the consumer mindset. I like that about the CFPB and the approach. But it really comes down to is you're actually making more decisions with technology today than you were maybe one decision covering a lot of different use cases or reasons before. By making smaller decisions, you can use different data in different ways as long as you have the rights and you have the backing to do it. So it's some of those kinds of things that I think are changing quickly already in the marketplace that we as a bureau need to continue to connect with, right? And there's the credit side of things and there's the other data side of things, and continuing to invest in the other data to be valuable to everybody in this room, as well as to us to say, hey, how are we improving all of our lives to transact to do what we want to do as consumers? We're all consumers in some fashion. And so that's sort of the vision and the approach of how we're going about it. But it's not a quick journey, and it's something that definitely influence and help in collaboration in industry forums helps give a little bit of ammunition to help present the case so that it's not one person standing alone anymore.
And I think before we turn this over and offer us an opportunity for some questions from the crowd, I think we should talk on the other side. How do we incentivize enterprise to innovate? Because any kind of technology change is cost, right? This isn't bringing money back, but how do we show that the innovation can also reduce the fraud, which then actually can have a return on security and risk investment?
Yeah, that is the problem, isn't it? Going back to the fuel pumps, I mean, that's the problem why they keep pushing back. They're estimating $7 billion to update those fuel pumps in the field, and that's kind of inhibiting them from going forward. There's, I think, 1/3 of all the fuel pumps out there today can't even be field upgraded. They have to be completely thrown away. There's all kinds of other implications of every time you touch those fuel pumps, and it's the cost, to your point, is completely impeding some of the advancements in technology. 80% of all gas stations are independently owned, which makes it even that much more difficult. So again, we have to find ways to either subsidize, maybe that's an opportunity to subsidize some of these high costs, to go out there and implement some of this payment technology that's going to help mitigate some of the fraud. But again, costs are always going to be something that's a concern to everybody, and it's not getting any better, that's for sure.
A lot of the budgets, I would say, are going the way of customer experience.
Right.
Right, and so if it lends to helping to say yes, I think there's more incentive for enterprises to invest.
That differentiator to the market.
Absolutely, it is a differentiator, but it is a cost. It is a massive cost,
Oh, yeah.
whether it's fuel pumps or whether it's a
ATMs,
retail
yeah.
website or ATMs, you name it, right? And so I think that is some of the incentive is really to continue to keep or go against that omni-channel experience in one fashion, to invest in ways that make sense so that the experience is a little bit more seamless, but stop and be friction when you need it to protect the enterprise.
Chris, did you have any?
I was just going to add that, you look at the SMB world, this is where a lot of the jobs are added. They're also the group that is the most vulnerable overall to attack. And I think they have to have their own separate focus. And I think one of the things I've advocated for, and some other folks, is that some of these compliance disciplines like PCI be simplified in terms of looking where the risks really are and then attacking those risks with the focus. So, for example, if you store paper medium, there's all kinds of rules around that, but that's not where the breaches are going to happen. It's when you have a third party who manages your system remotely and their remote access is compromised. So learning more about those third parties and the risk that's involved is a huge part of this process.
Absolutely. Gus, any final words on that? Well, I think at this point we've got a few minutes left, and we had built in some time for some Q&A, and I'm not sure, because these bright lights, how far I can see back, whether we have some microphones out there, but we'd like to open up the floor to any questions for any of these topics or others for the members of the panel. What do you see out there? Can't really tell. Maybe, maybe not. Well, can you guys see anybody out there? I can't.
Can't see past the first row.
It may look young, but I can't see very far. There's a question right here.
Hi, I'm Ellen. I'm from Global Payments, and I'm part of the internal audit department. So IT, so I do, we are SOX compliance effort, exposed to like the challenges of trying to get companies to adhere to controls or to address IT risk. So I guess I'm just interested, because getting PCI compliance is just first level of compliance. It doesn't mean that you're addressing all the risks. So how do you see yourself or see the government being able to incentivize companies to go beyond just even just PCI, so that to get to a higher level than what you really need to be able to protect your business and be security?
I think there needs to be a tangible benefit, and maybe we should repeat the question for the folks in the back, and tell me if I get it wrong. I think the question was, first level is compliance, and compliance gets you only so far. What incentives can we or the government put in place to make sure that you go from, just basic compliance to a level of actual security that moves the needle? I think the one way to think about it is what all of us have been talking about up here, which is incentives. The government has put out that cybersecurity framework that we're talking about, but it's really market players that have created the incentives to go beyond that level one. That is, for example, the insurance market. Cybersecurity insurance is now getting much more savvy about who they're going to underwrite. They're going to say, rather than just, oh, you're a company, you can pay this premium, we're going to give you this coverage, they're going to look behind the curtain to see if you're hewing to a particular standard. So those market participants are helping to move the needle. Likewise, if you're doing business with a regulated entity like a financial institution or someone else who has actual cybersecurity regulations or guidance that they have to follow, because of the problem of third-party risk that you outlined, they're going to have everyone in their orbit be audited and live up to the standards that they themselves have to follow. So we're getting there as a market. But I think your question is, what can the government do? And I think that what the government could do is make it worth companies' while. And the way it becomes worth the company's while is if you follow this standard, whatever the standard is, whether it's developed by industry or in collaboration with the government, then you're going to get some measure of liability protection. Because everybody out there sees how expensive a successful cyber attack is, and they can do that cost comparison between that cost and how much it costs to meet the standard, and say, God, if I could protect myself from that level of liability, it's worth it from a value proposition.
So Gus, would you be recommending that the government would actually act as an insurance company to companies that adhere to this?
You know, one of the frameworks that I think about is something that we had at DHS called the Safety Act. And the Safety Act for anti-terrorism technologies that are presented to the department that are determined to be effective for foiling attacks, the department requires the manufacturer of that technology to have a certain amount of insurance, a high level of insurance. But if that technology fails in the course of a terrorist attack, then that's the maximum amount of liability that that company could be on the hook for, as well as its downstream purchasers. And I think it's not an exact analog to cybersecurity, but if we had some sort of liability framework like that, it would encourage both the development of new cybersecurity technologies and, more importantly, their adoption, because you get to share in that liability protection umbrella.
I think you had a
follow-up. When the participants have to pay into some kind of an agency of some kind in order to fund that type of thing, and they might want to do that, by the way. That's what banks do.
Mm-hmm. Yes.
So that if you did that on this side, that would be a way to fund it, where everyone shares in the liability.
Well, I think of things like the New York State insurance pool that was heavily used after 9/11. I think something like that is probably something like what Gus is looking towards, is a shared risk pool where by size of your organization you could contribute as needed. It's a very interesting concept, and I think it's something that does answer your question of how do we incentivize the business, because compliance doesn't equal secure. We know something's going to happen. If an organization can prove that they've been diligent and good stewards of shareholder and customer value, if the government can help to subsidize the risk there, it incentivizes better behavior. Follow up?
So, are you saying that the current administration is moving away from more financial regulations, like Frank Dodd is going to move to putting in more cybersecurity regulations?
No, I don't think it's going to be the type of regulation that was, the question was for everybody, is this administration that's moving away from financial regulation like Dodd-Frank going to regulate in the area of cybersecurity? And I think going back to the earlier point about who's driving the cybersecurity train in this administration, Tom Bossert is the name that I mentioned. He is not one for command and control type regulation, but instead trying to have government create the space and the incentives for companies to up their cybersecurity game. So while that might take the form of regulation, it's not going to be, you must do this. Instead, it's going to be how can we create the incentive set for companies to do the right thing and protect themselves.
We had a couple minutes left here. Anybody else have a question? Anyone? Scanning the room as far as I can actually see. No, I think we've got I think we can close up. We're right on time. I think you're trying to get some time back. I want to thank everyone on the panel here for coming out today. I know especially Gus and Ken and I tried to get in from Northeast last night, and we all kind of made it, and we were pretty lucky. And I want to thank everyone for participating here and for attending, because it looks like we had a great crowd here. I know that several of these folks will be around for the rest of the day. I'll be here for a little bit longer as well if we're available for networking or other times to speak. Or please reach out to us on social media. I'm sure we're all there. And with that, I'll just say thank you guys for attending.
Thank you.
Thank you.